Welcome to today's webinar, the 14 Steps to Financial Freedom with MAPS Coach Heidi Fore. Please note this meeting is being recorded and will be available within 24 hours on the MAPS Fast Track YouTube channel. Currently, everyone's on mute. However, if you have any questions for your coach, please type them into the chat box. Following the meeting, if you have any questions about today's call or our other coaching programs, please email us at fasttrack@kw.com. And that's all for me, Heidi. Take it away.
Thank you. Oh my goodness, I am so excited, you guys. We are going to cover a ton of content in the next 30 minutes. You're going to be so glad you came today. This is great. This is so great. So hopefully you are here to hear about the 14 steps to financial freedom through owning rental properties. I'm sure there's other ways to be financially free and independent from having to have a job. And the way that I think is the best way is through owning rental properties, and that's what we're talking about today. My name is Heidi Fore, and here's a little bit about me. I've been a realtor for over 20 years, and I've been a MAPS coach for 7 years. I have 59 rental property units, and I bought all of them since 2018 in a low inventory market when everyone said it was a terrible time to buy and there's no deals available. It's not true. I found 59 of them, and I love sharing with people how I did it. I love sharing. This is my favorite thing to talk about. So before taking action on anything in this class, this is my warning to you. Don't do anything until you've talked to an attorney to make sure that you're making the right decisions for you and your financial well-being and people you care about. Talk to your accountant, talk to a financial planner, and talk to your realtor if you're not a realtor. Before buying rental properties, because there are just so many things to take into consideration. So here's a little illustration about the difference between today's class and my regular 8-week session. Today's class is water skiing over lots of different topics today, where we're not going deep on any of them, but we're going to cover a lot of them. And it's going to just give you a really great overview of how to get to your financial freedom day. So if you look at my 8-session course at the outline, which is on fundyourbiglife.com, you'll see that we go deep on each of the 14 steps. Very, very thorough. But today is going to be great. We're going to water ski through a lot of excellent topics and things for you to think about on your wealth building journey. Out of the 14 steps to get from wherever you are now to Financial Freedom Day, a day when the passive income from your rental properties covers a big life that you've envisioned for yourself. Step 1 is to make a cash flow plan. And as you know, cash flow can flow into your bank account from one income source or from many income sources. I hope you have many income sources of ways that cash comes into your bank account. And I just want to talk about a few of them today. So cash can come into your bank account from a job. Maybe you and someone that you live with, but you both have jobs, which is great. Multiple streams of income right there. Maybe you have a side job. Maybe you have a part-time job, nights and weekends. Maybe you are a part owner of a company and you have some money coming in from that. And there's lots of different ways cash can come in. But my favorite way to talk about cash coming in is from rental properties. So after the cash comes into your bank accounts, then you get to decide where it goes, right? If you don't tell your money where to go, you wonder where it went, right? It's one of my favorite sayings. And I like to tell money where to go instead of wondering where it went. So places that it can go would be you're paying for your life expenses, paying for savings, which is expenses that you're anticipating in the future, giving it to charities, giving it to people you care about, or putting it into investments. And out of all of those things, cash flows from investments back into your bank accounts. And here is an excellent illustration. I made this. I hope you like it. They've got at the top job income, maybe a second income, and investor income. That's how the cash comes in. Some of those have business expenses attached to them. And the profit from each of those sources of income comes into your personal bank account. From there, it goes in many directions. It can go towards paying your living expenses, like the roof over your head, savings accounts, and I recommend having a separate savings account for each of these areas, an emergency savings account in case, I don't know, there's a global pandemic and people can't work for 2 months. It could happen, right? Maybe taxes. Some of us need to pay those. Oh, wait, all of us need to pay those. Tax account, a health savings account for health emergencies, a car savings account so that you never end up with a car loan ever again, a home improvement savings account for when things go wrong, like you need a new water heater, you need a new roof, natural disasters happen. And finally, education for yourself or for the people that you want to provide education for. And so if we always are planning for those future expenses, then we'll never be in a place of panic. So we want profit from your bank account to first fund your living expenses, second fund your savings account, then give money away to the people that you feel need it. And then, allocate some money for making memories so that you don't go your whole life without a vacation or without doing the things that are on your vision board. Hopefully you've made a vision board. Maybe it has a lake house on it, or maybe it has a trip to Disney World on it. Maybe it has a cruise ship on it. Those are making memories, and it's okay to budget for that. And it's better to go ahead and budget and save for it than to all of a sudden say, you know what I'm going to do today? I'm going to take a 5-month vacation and not have any way to pay for it except credit cards. So we want to make sure we're budgeting for those things and also investing. So out of all the different places that you can invest, and just a few of them are like putting money into syndications, stocks, bonds, owning a piece of a business, or loaning someone money. My favorite way to invest is through rental properties. And now we're going to see how you could allocate money towards each of those things. So here's an example, and I highly suggest you do this on your own sometime, is write down actual dollars for each month of where the cash is going to come from, where it's going to go, and draw it out so that you can actually see it on paper, where it's going to come from, where it's going to go, and then have a plan for the investing. So that's part of step one. If you're not sure what to do next, then the step one, part B, is to get more knowledge. Get knowledge from classes and books to make your specific plan for cash flow and investing. Attend online webinars. Oh, you're doing it now. You can check that one off. Go to in-person classes, books and audiobooks. There's so many great books on investing. Ask mentors to go to lunch or have coffee. Listen to podcasts. You can sign up for email newsletters from companies and mentors that you want to follow. Follow them on social. And probably your area has a real estate investors association group that meets monthly, and they probably have some really great programs that you'd get a lot out of. So I highly suggest Googling that and going to their next event. If you don't, go to meetup.com and type in investors, real estate investing, and you'll be able to find a group of investors that meet near you so you can find some of those mentors and get some great advice. And if you're a realtor, you can actually take continuing education classes on investing topics and knock out 2 things. And of course, I suggest taking my 8-session course called Fund Your Big Life with Rental Properties, which goes deep into all the things that we're talking about today. Let's go to step 2. Step 2 is deciding what type of property makes sense for you to buy, like a condo, a house, a duplex, a triplex. If you follow me on Instagram or on Facebook, I just did a 1-minute video this week on this topic, on the pros and cons of each of these. You could invest in a large apartment buildings with 5 units or more, or a mobile home park, an RV park, storage buildings, commercial space. And if you have a condo or a house or a duplex, you can rent them short-term, mid-term, or long-term. And all of these have pros and cons. Again, we're just water skiing today, so we're not going into each of those. We're moving on to the next topic already, which is step 3. Find potential properties to buy that meet your criteria on paper. So you can first decide on what your criteria is, of course, and there's so many different key performance indicators for this. Financial ratios. Like you might have a criteria that is a certain number of dollars per month in profit. Your criteria might be a certain percentage of cash on cash return on investment. You might have like looking at gross rent multipliers. These are all different numbers that investors watch and how they determine success for a property. So that's step 3. And then you'll also want to make sure that you'll still be able to meet your criteria if you decide to do a cash out refinance on that property later. So you want to think that through before you make the purchase. And then you'll want to find an area of the country where cash flow makes sense for you based on your criteria. It could be that the city that you live in, there aren't any properties that meet your criteria. That's possible. And so then we'll need to look at other cities. The closer, the better. And if you end up buying 8 states away, it's totally fine. All you need is a great realtor there and a great property manager there. And I highly suggest blocking time to look each day or at least once a week to look for those properties that meet your criteria on paper. Then once you're like, okay, that meets my criteria on paper, then you'll evaluate the property and like using, like there's websites that can tell you those key performance indicators. There's apps on your phone, spreadsheets that can show you the criteria. But you'll want to have a checklist of what to look for when you go tour it in person. And I'd be happy to share a checklist, those checklists with you. Step 5 is deciding the best way to pay for it. So I sat down one day and I wrote down all the different ways that you can pay for properties, rental properties, and I came up with 20. There's, of course, cash in your savings account. There's now, just because you have some cash in savings account, don't use all of it to go buy a rental property. You want to leave some in there for those other savings events that we mentioned earlier. You can get a line of credit, or you could do a cash out refinance for another property. You could put 20 or 25% down as a down payment and a traditional fixed rate 30-year mortgage, or you could do a 15-year mortgage to pay it off sooner. You can get an adjustable rate mortgage through a small bank that adjusts in 5 or 10 years. And just make a decision at that time. If the rates have gone up, you could, or sometime before it adjusts, fix it with a low rate. You could take on a debt partner or an equity partner, and there's many, many, many other ways. But again, today we're water skiing, not scuba diving on that topic. Step 6, make an offer and close on the property. Follow the checklist for every offer. Again, I love checklists. To make sure that you don't forget something important, and consider using your own purchase agreement if that's allowed in your state that you can quickly fill out. I use a Google form where I can write an offer in 7 minutes. I time myself. I have a Google form that has all of my information, and then I use a Google Forms add-on that then populates my purchase agreement, and then I quickly electronically sign it and send it off to the seller. These are all things that I explain in the longer course on this. Again, we're water skiing today. Follow the contract to close checklist, also very important checklist for inspections and paperwork. Very, 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 very important. This could be a huge financial mistake. A huge financial mistake can be made if you don't follow these contract to close checklists and pre-closing checklists. Yes, I can share I share the Google form I use in my class. Yes, I share everything in my class, no secrets. Step 7, renovate the property to get it rent ready. Also, when you're doing this, track your hours so that you can tell your accountant how many hours you spent in the real estate industry. There are certain tax advantages for this. Again, not an accountant. You should definitely ask your accountant about it, but tell them this is how many hours I spent working on my property and in real estate. Do I qualify as a real estate professional? And can I get some tax advantages for that? Just write that question down. And it's good to start doing that now at the beginning of the year so that by the end of the year, you can have tracked all your hours. Obviously, you should also track your mileage. You can get your kids involved and pay them to help you with your rental properties. I teach mine to live on 50% of their pay. They hate it. They call it the mom tax, and it's good for them. I don't care. I tell them that they are investing 20% for retirement, and I have that going off to their retirement account. And they're saving 20% for an item that they want to buy someday, like saving for a car or their own investment or their own personal residence someday. And they have to give away 10%. Yeah, they don't like me very much, but it's good for them. So the other piece to this part of step 7 is making smart choices that pay off at appraisal. One of my favorite things to do is what my son calls buying dumpy houses. He said, why do we always buy dumpy houses? He's not very excited about being a real estate investor. He's 12. And I say, because you make money on the dumpy houses. And I say, look around. This is how we're funding our family is funding your college education. If your family owned a farm, you'd be milking cows today, but your family is in real estate, so you're painting walls today. This is how our family makes money. And we buy dumpy houses. That's just what we do. So once we paint the walls, put in the light fixtures, et cetera, then we go get an appraisal and we get a cash out refinance loan long-term on that appraised price, the improved price. And most of the time we're able to get all of our money back out that we put in and just recycle that cash. But that's whole another topic for another time. Let's talk about step 8. Find respectful tenants and get leases signed. This right here is, I think, what stops a lot of people from being a landlord is they're scared of working with tenants that either don't respect them or don't respect the property. If you put certain procedures in place, you can find respectful tenants that respect you and respect the property. Of course, you'll want to follow all of the laws for advertising and handling applications, and those are different state by state. So want to write this down, find out laws on leases and applications for my state. You can use websites for doing those tenant applications and the background checks. There's a checklist that you should use for each tenant. And if it's allowed in your state, use your own lease agreement that could, again, be filled in using a Google form. It's so quick. If you have a Google form to just put in the information about the new tenant, it populates the lease, you send it out for signatures, you get the security deposit in the first month's rent, and everybody's off and running. Of course, you're also going to want to do a walk through and put it on video with that tenant so that you can both be in agreement on what the condition was like when that tenant moved in. It eliminates so many headaches later when the tenant moves out and there might be an argument over whether or not something was broken or damaged before the tenant had moved in. So we want to document that. That definitely needs to be on your checklist, and get a move-in condition form signed that documents any damage that was and wasn't there when that tenant moved in. These are just some of the things that should be in your procedure list that will save you a lot of money in both repairing damages and in court costs and evictions, collections. I have so many stories. And let's move on to step 9. Step 9 is use maintenance checklists. Can you tell I like checklists? If you had a home inspection, fix the issues that came up at your home inspection. And you need to make sure that you have working appliances that are safe. They don't need to be top of the line. They need to be new. You can buy them at a scratch and dent shop, or get the older models that are still safe and operational, but they don't have to be the most expensive. You need to have working windows, but they don't have to be new windows. And just make smart improvements that will make a difference in the value and in the rent income. Paint and flooring. We always get our money back on paint and flooring. Light fixtures, small landscaping changes. We always do well by putting money into that. And again, this helps improve the value of the home, and your equity in it, and also helps improve how much you can get in rent, which ultimately helps you with your profit. That's step 9, is improving the property. Step 10 is tracking that profit. This is really seriously important to do the right way for tax time. Of course, you're going to want to categorize every time a tenant pays you and every expense for each property. And you want to split it up. This is something I've learned over the years, is accountants really like it when you can tie every expense to a property as much as possible. They don't like it if you just say, I went to Lowe's and spent $80. I don't know what it was for. You need to put on there, and even if it's writing on the Lowe's receipt what it was for so that you can remember it later, or making sure that you're categorizing your expenses every day or once a week. What you don't want to do is wait until the end of the year and then you're going back 10 months trying to remember what you spent $80 for at Lowe's. So one thing that you can do at Home Depot is you can actually put in notes on the screen at Home Depot what something was for, and then you can see it on the computer. And that helps you when it comes time for categorizing income and expenses. Some people just use a spreadsheet for this, or a Google sheet. Some people just use a notebook, and that's fine too. But there are some really good apps and websites that you can use for tracking expenses per property. And then these apps and websites also can run a report on your rental portfolio as a whole, and they can run a report per property. So you can see which of your properties is performing really well and which ones maybe aren't, and you might consider selling. Step 11 is to get advice from professionals every 6 months, and maybe even every quarter, but just consistently getting advice from a tax strategist is important. Getting good advice from a lawyer about asset protection, about LLCs, and like, should each property be in an LLC? Should you have every 4 properties in an LLC? Should a property be in a land trust? Like, you need a really great lawyer for that. And also meet with an insurance specialist about making sure that you're covered for all the things that can go wrong. And there's a lot of different types of insurance that landlords can get. Like, you can have your liability insurance, you can have an umbrella policy, you can have, of course, you're going to have a policy per house. And you need to be able to decide how much you need to be insured for per property and as a landlord. So these are all things that insurance specialists would love to talk to you about. And it sounds very exciting. Lots of fun. Let's talk about step 12. Evaluate all the options for purchasing the next property. Like I said, there's 20 different ways that you can pay for rental properties. My favorite is the first one on the screen here, that if you paid cash for a house, see if the cash flow would still be good if you did a cash out refinance loan on that house or apartment building, based on the appraised value after you've done the lights and the paint and the flooring. Oh, and by the way, when it comes to flooring, when you're replacing flooring, don't put carpet back in. Just go to something that is stain proof and will withstand lots of abuse. Otherwise, you're going to end up putting carpet in every few years. When it comes to finding a cash out refinance lender, not all cash out refinance loans are the same. They are different at every lender. You might have to call 20 banks to find one that will give you the terms you want on a cash out refinance loan. In addition to teaching classes, I'm also a one-on-one coach, a business coach, and a financial coach. And yesterday, one of my coaching clients said, I called 7 banks this week and I can't find anybody that will give me the terms I want on a cash out refi. I said, call 7 more. Somebody will. You just have to keep calling. When I do this, I get so many different answers. Sometimes people say, yeah, we'll do that, a 30-year fixed rate loan for 9.15%. And some other people will say, yeah, we'll do a 5-year fixed rate loan for 7% or 6%. It's just all over the board. You have to just keep calling until you find a lender that will give you the terms you want. But when you find the one that a good lender that gives you the terms you want, it's really beautiful. As an example, I bought a house for around $50,000 after putting in some cosmetic improvements. It appraised for $100,000. I did a 75% cash out refinance. So at the refinance closing table, I got a check for $75,000. It was like all of the money that I had put in it. And so I just took that $75,000 and I went in and did it again and again and again. It's like, it's just recycling the same cash over and over. It's my favorite way to pay for properties. And people call this the BRRRR method. It stands for buy, remodel, rent, refinance, repeat. If you don't like using that method, totally fine. Some people don't like that method. Choose one of the other 19.
So are we paying for the appraisal ourselves?
Yeah, they want that appraisal paid out of pocket. Mm-hmm.
Can you repeat the BRRRR again, please? I'm sorry.
Sure. Buy, remodel. Some people call it rehab. Rent, refinance, repeat. It's a way of, I call recycling cash. I think it's fantastic.
I'm sorry, what was the words again? The word BRRRR?
BRRRR.
Oh, that one. Oh, okay, thank you.
Yeah,
Sorry.
you're welcome. That's okay. Happy to help. Okay, 13. Here we go. Get clarity on what your personal lifestyle costs and how much you need to put into cash savings for potential future events, like if you have a kid getting married, for example. Put a system in place to know when you have more than enough rental profit to cover your lifestyle costs. So first, you're going to track your lifestyle costs to see how much your life costs to live. Secondly, you're going to need to track income and expenses to know when you're making enough consistently in profit to where your rental properties would pay for that. And if your rental profit can't consistently cover your lifestyle expenses and taxes and fund your savings plan, you're going to need to repeat steps 3 through 12 over and over again until you have enough properties. You have to just make repetition and patience and perseverance your friends, your allies in your quest towards financial freedom day. This is why it's important to measure and reflect on your progress daily or weekly or monthly, because like it might take you 3 years or 5 years or 15 years or 30 years to get to financial freedom day of repeating these steps, just depending on how good you get at managing your cash flow and your debt choices.
Wednesdays.
And finally, step 14 is to hire someone, if you haven't already, for the things that you don't want to do anymore, like advertising your vacancy, showing the properties, collecting rent, filing evictions, tracking the income and expenses. These are all things that someone else can do. And when you have enough profit coming in, you can afford to hire someone to do all of those things. And then you'll have a financial freedom because the money will just be coming into your bank account from those properties and you're not doing any of the work on it. And that is a beautiful, beautiful thing. That means you are financially free from having to have a job, but you can still work if you want to. Or you can just do what you love all day. You can travel the world, hang out with your family and friends. And in my classes, this is how this is what I dive deep on, is all those details to accomplish each step. So you can get information on my 8-week class on fundyourbiglife.com. The cost is 2 payments of $199, $199, 2 payments of that. And you'll get all of the details. I'm a very detail oriented person. I love details. I love checklists and processes. And I focus on the how, like the how you do step 1 better. How do you do step 2 better? How do you do step 3? Like all the details. And if people have questions in between those 8 weeks sessions, they can ask me questions in our Facebook group. And as soon as someone signs up for the class, you get access to that Facebook group immediately. And you'll also get a workbook filled with 100 pages of content, and including all of my checklists of everything from contract to close to maintenance, all the things, and what should be in a lease. You get to ask me questions about any potential deals that you've got going on. And you get my truly amazing spreadsheet that help you make good financial decisions. And the best part about this is you don't have to watch the course live. You can watch it live, like you can watch it with your whole team at work. You can watch it with your spouse, or you could just sign up for the course. And then when the recording comes out, watch it at night after the kids go to bed. Watch it in the morning while you're having your coffee. Watch it after your spouse, your partner gets off work. I like to watch it, suggest you watch it on Wednesdays and make it a wealth building Wednesday activity. The hours and days and details are on fundyourbiglife.com. And here's what some students say about the course. Heidi is amazing, and she did not hold back on any processes. So inspiring. She not only gives investing advice, but good financial habits. Thanks, Kathy. And I just got this a couple weeks ago in my Facebook message from Robert McDonald. This was so lovely. I hadn't heard from him since he took the class, and he sent me this. He said, Heidi, I just want to thank you for your class. With Jennifer's help, I was able to purchase 2 new construction homes under a self-directed IRA, financing it with a non-recourse loan. I would not have tried this without everything I learned from your class. First 2 doors in the bag. Congratulations, Robert. That's awesome. Gabby Brenna-Holtz, who's a director of KW Wealth, says, great step-by-step content, very helpful for someone who is building their foundation for investing. And Susan Joyner said, whether you're new to investing or seasoned, whether you're looking to buy and hold or buy and flip, Heidi will give you the tools to achieve your goals. Great class, very detailed. Told you I love details. Here is a QR code if you want more information on it. Would love to see you in there. I think it's a fantastic class, and it's all of the hows of how I bought the properties, how I maintain them, how I track the expenses, how I track my personal expenses in life as well, and how to save time and how to save money and how to not make mistakes that I've made. So you can learn from my experience. There is not a commercial component. I just focus on houses, condos, duplexes, triplexes, fourplexes. That's what this is about. It's like on basically being a landlord for those smaller deals. smaller deals. Well, it has been an amazing 30 minutes with you guys. If I didn't address your question today, I will email you. Thanks so much for being here. My name is Heidi Fore, and I hope that I'll see you in my class, Fund Your Big Life with Rental Properties.